We're going to run through the self-employed support scheme, a bit about the coronavirus job retention scheme, although of course that is mainly for employees, the business interruption loan scheme, other tax and cash flow management tools, and something about the non-domestic rates and support grants. I'm going to hand over to Karen now to talk about the Self-Employed Income Support Scheme.
Thanks,
Karen.
Isobel. So yes, the Self-Employed Income Support Scheme, or as it's been dubbed, the SEISS, was announced just over 3 weeks ago by Rishi Sunak. It has been recognised by the policy teams that have created it as a relatively blunt tool, which they have had to develop at some pace. And so there are some individuals that do fall outside the scope of the scheme, which we'll come on to talk about in a slide or two. I think for those individuals, had there been more time to develop some infrastructure around the scheme, the government might have wished to include them. But the government's view is that the current scheme should cover 95% of self-employed individuals. And just looking at it, what broadly provides is a grant which is equal to 80% of 3 months' worth of average monthly profits, up to a cap of £2,500 per month. Now, those monthly profits are calculated over a 3 tax year period ending in April 2019. So it takes into account the 16-17, 17-18 and 18-19 period. And it's going to be payable in a lump sum. Now, it's important to note that that lump sum will be taxable, so be treated as profits, which are subject to income tax and NICs. And that is one of the comforts that HMRC are taking from the scheme, that although it's a relatively blunt tool, on the basis that it is taxable, they hope that there is no abuse of the scheme. The average annual profits, in calculating those, HMRC will effectively look at the 3 tax years that we mentioned, add up the profits or losses for those years and divide them by 3, and then obviously divide by 12 to reach that average monthly profit figure. If you didn't have any trading in that 17-18 period, then you only look at the 18-19 period, even if you did trade in 16-17. So there are some changes depending on how your trading pattern has evolved over the years. And similarly, there are some special rules if you're a self-employed individual who's been paid under a loan arrangement that's now caught by the loan charge, or if you're a farmer, you take your average profits before any farm averaging claim calculations are taken. So just looking at the next slide on who is eligible for the scheme, you need to be self-employed, obviously, which does include partners in a partnership or members of an LLP, for example. You must have traded in the 1920 tax year, and you need to be continuing to trade, or at least intending to continue to trade. So if, for example, you're currently unable to trade due to the coronavirus restrictions, if you have an intention to trade once those restrictions are lifted, then you should be fine. In addition, you need to be able to demonstrate that you were trading and effectively self-employed in the 18-19 period as well. We'll come on to talk about that in a second. More than 50% of your income needs to have come from self-employed, either in the 18-19 tax year or as an average over the 3 tax years ending in April 2019. So if you fit into either of those and more than 50% of your income was self-employed, then you should qualify for the scheme. And you need to be able to demonstrate to HMRC that your business has been affected by the COVID-19 pandemic. HMRC have said that they're going to take a risk-assessed approach to dealing with compliance issues. On this, it's not going to be possible for them to investigate every claim, so they're going to do that on a risk-assessed basis. But I think one point worth noting is that there isn't a threshold level of reduction that you need to be demonstrating in your trading profits in order to claim the relief. You just need to be able to demonstrate that your profits have been adversely impacted. And this differs slightly from the coronavirus job retention scheme that Elaine will be talking about it, as under that scheme you're unable to work for your employer during the period of furlough, it is possible and I guess expected that self-employed individuals will try and continue to trade during the COVID-19 impact to their trade. In addition, your trading profits need to be less than £50,000 either in the 18-19 tax year or as an average over the 3 years ending in April 2019. So when will you be able to make a claim? So HMRC are aiming to contact all of those people that they consider to be eligible by mid-May. So this is going to be application by invitation only. It's up to HMRC to determine who they consider to be eligible for the scheme. And they're really urging taxpayers not to contact them in advance of that in relation to the scheme, as they're concerned that that might divert their staff attention away from getting the scheme at an operational phase. So they're urging you not to contact them at the moment. They're expecting payments to be available in early June, and they will be paid in a lump sum. Now, very importantly, one of the key planks of being able to claim under the scheme is that you must have submitted your self-assessment tax return for the 2018-19 period. Now, that's not the period that you will next have to submit a tax return for. That period or your assessment should already have been submitted in January for that period. But if you are late, HMRC have said that they will consider applicants to be entitled to the scheme if they submit their self-assessment return by this Thursday, the 23rd of April. So if you haven't submitted your 18-19 tax return on time, you absolutely need to get that into HMRC before Thursday in order to qualify for the SEISS. So do get those self-assessment returns, speak to your accountants, and there are some tax charities such as TaxAid who are offering to help with those who are struggling to actually be able to get people to help them submit their returns. Equally, if you're planning on making some amendments to your tax return for that period, it's important to note that there will be no amendments made post the 26th of March, which will be taken into account in calculating the grant. So if you made any amendments after that time, it will be the pre-amendment figures that HMRC will be working off to work out what the entitlement is. So just as importantly as who qualifies is who's going to be left out of this scheme. Those who are trading or providing their services through a limited company, such as services being provided under a personal services company, those individuals are not actually self-employed, and so they will not be benefiting from this scheme. And there's been a lot in the press of pushback from those individuals who are concerned that they're not going to be covered by this scheme. They might be able to claim for help under the coronavirus job retention scheme, which Elaine will talk about, but it's possible that they'll be taking a relatively low salary with most of their profits extracted by way of dividends. So at the moment, those individuals aren't covered. Equally, if you weren't trading before the 6th of April 2019, you won't be able to claim. And obviously the 50,000 threshold that we talked about and the 50% self-employed profits will also be a limitation for some individuals. Now, it's worth pointing out that HMRC don't have the ability to look at taxpayers on a family unit basis. So you could, in theory, have a family which has one self-employed earner with profits of 51,000 who won't qualify for this scheme, but a family with two self-employed earners with profits of 49,000 each who will qualify for the scheme. So I think that's just an aspect of the blunt tool that they have created. So for those that don't qualify, there may be some help available under one of the funds that Isobel will come on to talk about, and you also might be able to qualify for universal credit. For those who are claiming a grant under this SEISS, you can still claim for universal credit in the meantime until you get your grant. The receipt of the grant will be treated as part of your self-employed income in that month that you receive the lump sum payment. And we've set out there the website to obtain more details on universal credit from the .gov.uk website should you need it. So I'm going to hand over now to Elaine, who will take us briefly through the coronavirus job retention scheme.
Thanks, Karen. So as Karen mentioned, I'm going to speak briefly about the coronavirus job retention scheme, or It's sometimes known as the furlough scheme. And most of you will have heard about this from the press, as it's been front page news on a number of occasions since it was announced about a month ago. Until then, no one had ever talked about furlough before, but it's become part of common parlance now. So the scheme's of most interest to employers, but we may mention it on the self-employed, as we have been asked about its application in terms of null service company arrangements. And the purpose of the scheme is to make certain payments to employers who can apply for a grant in respect of certain employment costs arising from the coronavirus emergency and coronavirus disease. And the purpose is set out now in directions that we received from Treasury, which sets out the kind of legal basis or legal framework for the scheme. So anyone applying under the scheme for a grant must demonstrate that furloughing was related to the pandemic and that their business has been severely impacted by it. It does apply to personal service companies if the company engages someone as an employee or work through PAYE, but only in relation to that PAYE income. So that's obviously reduce, I guess, the benefits that people can have under the scheme if they are paid a relatively low sum through PAYE income. So personal service companies can decide to furlough a salary, but they obviously can't claim in relation to anything paid by way of dividends. In terms of who can apply, the employer must have a PAYE scheme that was registered on the real-time information system on the 19th of March 2020, so that's the sort of cut-off date that we're applying, that we're using, and they can only apply if the employee is actually furloughed. And for that to happen, there must be a written agreement in place between the individual and the employer not to carry out any work. And the minimum period of furlough is for a period of 21 days. And I guess that's to stop people coming in and out of furlough, as it were. So that's the minimum that's going to apply. So the agreement not to carry out work is fundamental and critical to the scheme. But the government have released guidance to say it is possible for a director who's also an employee to still fulfil their statutory duties. So for example, if they need to file accounts or comply with other duties under the Companies Act, that's okay and isn't counted as work for the purposes of the scheme. But those individuals and personal service companies shouldn't do anything to generate commercial revenue or to provide services to or on behalf of the company. So that bit is clear. You can't do work at the same time. In terms of what can be claimed, so it's 80% of salary, which for people who receive a sort of fixed pay is relatively simple to calculate. For those whose pay varies, there's a more complicated calculation. So it's 80% subject to a cap of £2,500, and on top, employers' national insurance contributions can be claimed, as well as auto-enrolment minimum employers' pension contributions. The second point I just wanted to mention on the furlough scheme is that it also applies to certain public sector engagements that are within the scope of IR35. I think in general the public sector has been discouraged from making claims under the furlough scheme because they already receive sort of public money, but there are some situations in which payments can be made even if somebody's engaged through the public sector. So IR35, as you know, was postponed for the private sector and won't come into force until April next year, but it already operates in the public sector. And certain contractors who are deemed to be employees according to IR35 rules may be eligible for the job retention scheme if they're paid through PAYE. So in order to furlough them, the guidance says that the arrangement needs to be confirmed with the personal service company and also the fee payer, who will usually be the agency paying the personal service company. So again, there needs to be an agreement in writing that no work will be done. So that agreement that the contractor will do no work for the public sector organisation during the period. And if that's in place, then the fee payer can claim 80% of the monthly contract value, which is capped at the same £2,500 plus employers' NICs, and then that grant can be paid over to the personal service company. So I guess the message is there is a limited impact for personal service companies, but only where somebody's paid through PAYE. I'm going to hand over now to Isobel.
Thanks, Elaine. So I think the government was aware that there would be delays before some of these payments were received, either under the self-employed scheme or the job retention scheme. And so they've introduced the coronavirus business interruption loan scheme, which is a bit of a mouthful. But basically, the idea is to try and give government backed lending to businesses that need it. And basically, if you have turnover up to 45 million, 50% from trading, then you can get a loan of up to 5 million. And it'll be interest free for the first 12 months with repayment period over 3 years or 6 years. The 50% from trading activity, it's possible that that could cause some difficulty for organizations that are not actually trading but are investment. But I think that's still being looked into as to how widely it goes. When the scheme was first introduced, some banks were asking for personal guarantees. Probably wasn't their fault, because they were asked to lend on normal terms and personal guarantees would have been normal. However, the Chancellor has made it compulsory that they can't ask for personal guarantees for loans up to 250k, and also that they can't take a security over your house, over your principal private residence. In terms of how you claim, there is information on the British Business Bank's website about the scheme and about the lenders that are sort of approved for the scheme, and there are new lenders coming on board all the time, but you actually apply to your usual lender. The government guarantee is only 80%, so the bank who's lending has to satisfy itself about the 20%, and some might say that this slows things down, but that's how the scheme is at the moment. So it's probably important to try and get all your ducks in a row before sort of making an application. Chat to the bank first to see what sort of things they're looking for and so on, but be prepared to give as much information as possible. There are some other potential sources of funding. In Scotland, the Scottish Government announced last week, I think, a new £100 million fund, which is supposed to try and bridge the gap and address those people who aren't eligible for some of the other schemes. We don't have a lot of detail about it yet, about how it will operate. But as I say, the chat was that it would target the gaps, so it might be helpful for those who are left out. And I think we've had one question already about what about businesses in an early stage where they haven't actually made any profits yet. And so that would mean they would get a small amount under the self-employed income support scheme. So this new fund might help. Similarly, for creatives, there are funding arrangements through Creative Scotland, Screen Scotland, and Museum Gallery Scotland, which are worth looking at, as well as support for fisheries and seamen and so on, which, again, if you're in that industry, are well worth checking out. I think I'm handing back to Karen now to talk about some of the other tax-related sort of cash flow assistance things which might help you. Karen.
Sure, thanks. So there are a number of additional things that the government have introduced in order to help you manage your cash position from a tax perspective. The first is a deferral of VAT payments that your business is due to make for the 3 months which start from the 20th of March 2020 until the 30th of June 2020. So for all VAT registered businesses, there will be a deferral of the requirement to pay the VAT for that period until the 31st of March 2021. In that time, you still do need to submit your VAT returns, so you can't take your foot off the gas in terms of your compliance, but you won't actually have to pay any penalties and interest for the amount that you have actually deferred until that 31st of March period. It's important to note that if your business is in a repayment position from HMRC, so you're expecting payments back from HMRC of VAT, those will still be made. So it's simply a deferral of your requirement as a business to submit your VAT payments. You don't need to apply for it, so this deferral is automatic. But it's worth noting that if you have a direct debit set up to send the VAT payments to HMRC, you will need to take a positive action to cancel that. Otherwise, the VAT will still be collected. And then worthwhile making sure that once you come back into the post 30th of June period, you do actually set that up again so that you're making your payments on time. And the other bit of help that HMRC has provided is on the next slide, and that's in relation to any requirements to pay income tax self-assessment instalment payments. So any payments which were due on the 31st of July don't now have to be paid until the 31st of January 2021. HMRC are saying if you can still afford to make those payments, please do so, but there will be no interest or penalties on that late payment in the meantime. Again, none of this means that you get to submit any of your tax returns later than you would anticipate. It's simply a delay on that payment that needs to be made. And in the unlikely circumstances you have a direct debit set up for those instalment payments, then make sure that is cancelled in the same way that we mentioned for tax. There are a couple of other things that you might want to think about in terms of your HMRC self-assessment returns, and that is ensure that if you're likely to be in a repayment position for that last year's period, make sure that you're submitting your tax return early. So it's not due until the 31st of January next year, but make sure you submit that early, because you will then be entitled to a repayment earlier than usual from HMRC. So on the next slide, HMRC are sympathetic towards taxpayers that are struggling to pay their tax. So if you're genuinely struggling to pay any tax payments that your business needs to pay, you can approach HMRC to negotiate a time to pay arrangement. These are bespoke arrangements that HMRC negotiate with individual taxpayers and businesses, and there's not a one size fits all for them. But they have set up a dedicated COVID-19 hotline for you to be able to speak to them on this. It can be very busy. There are a lot of people contacting them, but do persevere. Try to speak to an advisor or try using the web chat service that HMRC are operating at the moment. And it's worthwhile before you approach them to make sure that you have your cash flow forecasts available to hand and budgets, so that you're able to kind of have a good conversation with HMRC about what you're actually what's available to claim. So we've set out the hotline there and a tweet by HMRC that talks more about general inquiries and how to make those. And so I'm passing over, I think, now to Isobel again to talk about business rates and to grants.
Thanks, Karen. So first of all, it's worth noting that there are different rates arrangement in the different parts of the UK, because rates are devolved. So the situation in England is different from Scotland and so on. But broadly speaking, as you can see on this slide, there's 100% rates relief for businesses in the retail and hospitality leisure sectors in Scotland, England and Wales. There's a bit more detail behind that as to which businesses are or aren't in those sectors, and if you are possibly in the sector, it's worth checking out on this. There's also a series of grants available, a £10,000 grant for small businesses and a £25,000 grant for businesses in the retail or hospitality sector. So these grants are, in England, they've always been 10,000 per property for the small businesses. In Scotland, they started out as 10,000 per business, but they've now improved, and they're 10,000 for the first property and 7,500 for subsequent properties. In terms of how you access these schemes and so on the next slide, we can see that the business rates relief, the sort of 100% relief, should be automatic. You shouldn't have to apply. The local authority should apply it. They may have to reissue your rates bill, but as I say, it should be automatic. So if you think you are eligible, but you haven't received this relief, contact your local authority and ask them about it. The one-off grants are called different things in the different countries. So in Scotland, it's called the Coronavirus Business Support Fund, whereas in England, they're called the Small Business Grant or the Retail, Hospitality and Leisure Grant. In Scotland, you have to claim those grants through the local authority websites. It's not automatic. And there's a form generally on most of their websites to claim it. In England, the local authorities have been paying some of these automatically. But if you haven't received this grant and you think that it's due, then contact the local authority again. And these grants, once you've got them, there's no question of them being repaid, as with some of the other HMRC schemes. So that brings us to the end of the sort of talking part of, well, we're going to carry on talking, but not looking at the slides. Karen, I think you've got some questions already about the self-employed income support scheme.
Yeah, sure. So somebody's asking, will there be an appeals process for anyone who thinks they should be eligible, but HMRC hasn't contacted them by mid-May? So as I mentioned earlier, HMRC are very keen nobody contacts them just now. But yeah, what do you do if you get to mid-May, towards the end of May, and you haven't heard anything? At the moment, we don't have a dedicated way of contacting HMRC about this scheme, but we strongly suspect that further details will be provided and that there will be some form of ability to contact HMRC to demonstrate that you are actually eligible for the scheme. If that doesn't happen, what we would recommend is if you get towards mid-May, towards the end of May, and you haven't heard from HMRC, but you do believe that you should be entitled to the scheme, that you contact one of the more general helplines that HMRC have offered up and seek to communicate with them through that, because I'm quite certain that there may be scenarios that slip through the cracks on that. But in order to do that, you obviously clearly need to have worked out whether you are actually eligible in the first place. So worth doing that work just now. Somebody else is saying, what do you mean by personal services company? A lot of people who provide services as a contractor to third-party clients do so by setting up their own limited companies, and they contract using that limited company, which they then become a shareholder, a director and employee of. So that's the sort of person that unfortunately sits outside the self-employed scheme, but probably doesn't benefit significantly from the coronavirus job retention scheme either. How are trading profits defined? Does it include rental income received as a landlord on commercial property? We don't have significant details on how various things are defined, but HMRC don't consider to income arising as a landlord of property to be trading profits. That is property business income, and so that would sit outside the self-employed help at the moment, so that wouldn't be covered. Any other questions, Isobel?
Yes, the thing about some confusion between all the different sorts of guidance. For example, there's the Treasury direction that's been published on the coronavirus job retention scheme and the HMRC guidance. I think HMRC themselves are saying to look at the guidance rather than the direction, but I don't know if you've got any comments about that, Elaine.
Yeah, it's been difficult the way that the guidance on the furlough scheme has been developed, because we've now had about 4 or 5 different versions of it and it keeps getting edited every few days, so it makes it difficult to keep up. And in the meantime, I think the Treasury directions are the bit that has the sort of status as law, so the guidance is just guidance. But there are some areas where there's some contradictions, so we're just having to kind of work our way through that. And yeah, the guidance certainly has improved since the start. So we've got a lot more detail on things like how holidays should be treated, what can be claimed for in terms of the payments, etc. now. But yeah, I think it is the Treasury directions that have the status of law, so will ultimately kind of take precedence if there's any conflict.
And I think it's worth also pointing out that the coronavirus job retention scheme is further advanced than the self-employed scheme is at present, because it was the first to be introduced. So, for example, the job retention scheme has been extended beyond that initial 3-month period. It'll be interesting to see whether a similar extension is ultimately agreed for the SEISS as well, and similar adjustments. So it's very much, everything is a movable feast at the moment. We're keeping an eye on any new announcements.
Yes, it's like having an endless series of mini budgets. If you want to contact us to ask any sort of supplementary questions, then our emails and phones and so on are on the slide at the end. But thanks very much indeed for joining us, and I hope we've answered some of the points that were puzzling you. So as they say, stay safe and well, and hope to see you on another occasion for a future seminar.